Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories this Monday morning. The dollar down after Joe Biden quits the presidential race and endorses Vice President Kamala Harris. Stocks are headed in a southerly direction here as the chip stocks continue to drag, and of course investors are reassessing their Trump trades. Now, Chinese stocks and the currency in focus as well, with the central bank cutting interest rates to support the economy. And we do have new details emerging from the recently concluded third plenum. Xi Jinping unveiling plans to boost local government finances and ease their debt burdens.
Well, certainly the news flow out of Washington continues here this morning, and we're seeing it filter through into these markets. In about 7 hours or so, that was the news of the day of Biden exiting that race, endorsing Vice President Harris as, of course, the Democratic nominee for president. So certainly, is the Democratic Party going to get behind his pick? Certainly is going to be the key question. And what does that mean for the whole Trump trade? Does a Kamala Harris presidential ticket actually change things and reduce Trump's chances of winning this election is the key question here today. So you are seeing a bit of an unwind on this Trump trade here today. The key beneficiary has been the likes of the Mexican peso. That yield curve is a bit flat here this morning as well. So that steepener trade also has been pushed back a bit. But gold continues to head higher. We're seeing 2,500 in play here right now amidst this political uncertainty. And Bitcoin, there you go. We're way above that 68,000 level here this morning. So it's not so much a broad-based sort of unwinding of the Trump trades, if you take a look at that. But if you look at the broad-based markets here in Asia and how we're assessing this news here this morning, certainly there's still a bit of confusion, but stocks are slipping, as Dave had mentioned there. And you're watching very closely those tech trades, the Kospi, Japan, Taipei. That's what you're seeing, most of those pronounced moves here. Taipei, though, just get going here. We're just down about 0.5%, but we're watching TSMC very closely because we're seeing, once again, these large cap mega tech shares being sold off pretty heavily in Seoul, in Tokyo. There you go. Taiwan Semi seems to be joining in on the fray here. We're down about 1% here right now. And dollar slipping, that certainly is part of that Trump trade that's unwinding as well. So you are seeing gains in the euro. Yen's also catching a slight bid here this morning, and treasuries are actually gaining, as I mentioned. But we're watching very closely what this means for China as well. Certainly, it's the third plenum, but really all this has been overshadowed by what we heard this morning, a surprise cut from the PBOC, cutting that 7-day reverse repo rate. Keep in mind, this is sort of the benchmark that central bank is trying to target here right now. We have an LPR rate decision coming up here in just a few minutes as well. Does that impact it in any way? But it looks like stocks are liking it so far. Futures are slightly higher here this morning, but yes, weaker for the currency, Dave.
Yeah, certainly one of the first reactions that we did see, of course, was in the currency as well. And I mean, keep in mind, you have a couple of major themes coming into play here today, right? So as Yvonne is pointing out, you have the chip story, which is taking the back seat. But when you look at it from a market's perspective, that's really what's driving the move simply on the equity markets themselves. We had that surprise cut out of the PBOC. Let's see what happens if that changes anything, really, as it pertains to this Chinese equity market, which, by the way, in case you missed it, MSCI China last week clocked in the worst five-day move going back to the start of the year. So, in fact, we're now, the 50-week moving average, which is a level that we haven't tested for some time. We could be at risk of falling below that level. We'll talk more about some of the steepening curves and, of course, where you are seeing as far as large cap ETF flows. But again, our top story continues to be the developments over in Washington. Okay,
that LPR came in earlier than expected as well. It looks like we are seeing a cut in the 5-year rate here this morning. So 3.85%. The estimate was for no change, and also a cut in the 1 year to 3.35%. So we're still talking about a 10 basis point cut for the 1 and the 5. Of course, we're watching the ones, the 5-year, which is really linked to mortgages and the like. So certainly, it seems like the surprise cut in the morning is really having an impact on really overall policy here. They're also adjusting that LPR release time to 9 a.m. to 9:15 local time. So we're just pushing that back a little bit, or forward a little bit now.
Yeah, well, they could have told us earlier. Actually.
Hey, you know what?
Well, in hindsight, they have moved the release time of that. So in terms of market reaction, slightly weaker even further here on the Chinese currency. I'm looking at China A50 futures traded in Singapore, seeing a slight boost following, well, markets wanted lower rates. We're getting lower rates early Monday morning. So in case you missed it, China cutting the benchmark, well, the now benchmark interest rate, 7-day reverse repo, about 45 minutes back. And then you have the loan prime rates. What is the rate that you give your best clients in China, risk-free almost, if you think about it? Lower, symmetric cut, 10 basis points on the 1 and also the 5-year. Okay, let's talk about market reaction. Let's bring in Mark Cransley. He's with us right now. Mark, I'm grappling with the top stories today across markets. Why don't you get us started? What's top of mind for you, Washington or what's happening, of course, in China?
Well, we can talk about China first, since it's just happened. And you can see that the PBOC, one of the messages here is it's the transmission mechanism of lower interest rates into the Chinese economy. That's what they're trying to reinforce here. So when they lower the repo rate, it doesn't always guarantee that the Chinese banks will actually start lowering their lending rates. So they want to they've probably leaned on the banks quite hard here to make sure that they quickly lower their rates soon after the PBOC has done its work. Because what's not been working really well is that people in the real economy haven't been benefiting from the gradual easing of policy from the PBOC. So that needs to improve. And the message is very clear that the companies that need the money, the people out in the real world, they're the ones that need to see the lower interest rates, and that's starting to happen. Also, the Chinese central bank is trying to reduce that spread between short-term rates and medium-term rates, which is what you see in most of the G10 world. You don't see huge discrepancies of 200 basis points or more between short and medium-term rates. It's much closer. So they're trying to squeeze that margin down as well. And they're continuing to emphasize that they want to focus on a very short-term rate, which is a standard among G10 and other major central banks. Official rates tend to focus on 1-day or 7-day rates. And that's what the PBOC is getting the market used to, is the idea that they're going to control monetary policy from short-term rates, not from long-term rates, not even 1-year rates. The MLF 1-year rate will cease to be of great significance. Gradually, people will stop looking at that so much and really focus on what's happening in the 7-day repo, or maybe even in the 1-day. They may even get to start when there's more liquidity, when they're satisfied that it's really working well. They may even shift to a 1-day rate. But for now, they're shifting towards 7-day. And that's clearly the message from today. Get all the yield curve lower and get people used to the idea that watch what happens in the 7-day rates for more announcements about where policy is going.
Yep, we're seeing a little bit of pressure on the currency. Rates are, in the 10-year slightly lower here this morning, too, Mark. I mean, we got to get to the other top story, which, of course, is President Biden dropping out of this presidential race, which, in some ways does impact the RMB as well. But I'm just wondering, what does this all mean for the Trump trade now?
Well, I think last week we were discussing, or probably I was the one that was more saying, these are power trades. And when you have the confusion, this brings more uncertainty into the picture for the presidential race. So traders will go back to focusing on what they do understand and what is relatively clear. So immediately on the horizon, they have a high degree of confidence that the Federal Reserve is going to lower interest rates, most likely starting with the September meeting. So rates are going to come down, and they'll probably come down further before the end of the year. What that means is it's negative for the US dollar. You can clearly see it's beginning to play out. It has been since the past couple of weeks when Jerome Powell sounded more dovish. We've gradually seen the US dollar decline. That's quite likely to continue. Also, the steepening of the yield curve is being driven now more by the short end. People are getting more confident, and so the 2-year Treasury yields and the shorter term yields are coming down slightly quicker in relation to the medium term. So that's a steepening of the curve. That should continue as well. The inversion, which has been in place for a couple of years, is going to gradually unwind. By the time the Fed meets in September, we may have no inversion at all in the Treasury curve. All of this conveniently looks like a Trump trade. It's really more about Jerome Powell and the Fed. The trades related to Donald Trump, if he starts to lose ground as the leader for the voting for the presidential election, if the betting odds start to favor Kamala Harris or somebody else, what you'll probably see is more rotation within US equities. There's plenty of room, whether it's related to EVs, defense, oil, energy sector, all of those things are up for grabs, and you'll probably see a lot more shifting around in the US equity sector. That doesn't have a huge bearing on what happens to the dollar or the yield curve.
Mark, thank you. Mark Cranfield there, kicking off the week with us from MLive, the strategist, joining us there from Singapore as well. Let's get to, again, that news of Joe Biden's decision to abandon his re-election bid and endorse Vice President Kamala Harris to take his place as a Democratic nominee. Our political news director, Jody Schneider, joining us from Washington, just coming back from Milwaukee from what a crazy week for the Republican National Convention. And then this news, Jody, is this Democratic Party going to get behind Kamala Harris now?
Well, Yvonne, in the last 6 hours or so since this announcement came, we've heard a number of big Democratic voices come out in support of Kamala Harris. We've heard from the Clintons, Bill and Hillary. We heard from senators like Elizabeth Warren, who still carry a lot of weight in the party, Patty Murray, the most senior woman senator. And remember, Kamala Harris came from the Senate. So those are endorsements of people who have worked well with her before. We have heard, from a number of people coming out and saying they will support her, and some big donors as well. We haven't heard from everybody, and Barack Obama came out and gave a statement saying it was the right thing for Joe Biden to do and praising Joe Biden, but not endorsing her, instead saying this should be, they should move forward and find the best candidate. So we will see, but there's a lot of factors in favor of her. First of all, she's already on the ticket. She would have to be, officially nominated in a roll call at the convention, but that would be much easier than having kind of an open, open primary, or so we say open conventions. We say brokered convention, where you have a lot of names, and it would be somewhat more chaotic. Also, there's the money. They have pledged. She's already on there. The donors are pledged to her, and that would be a lot easier than opening it up. So it seems to be that's the direction it's going. But this has been such a volatile and chaotic, primary, and now, regular. We're not even in really the general election cycle yet, and it's been so volatile that really you can no longer predict exactly what's going to happen. But it would seem there's been a lot of support for her already in these 6 hours, and there's a lot of people who think she would make a good candidate, could perhaps really bring some of those swing states that will be so critical to winning the election in November.
Yeah, Jody, I was going to ask you, how does she stack up against Donald Trump? And any conversations around who possibly might be the VP pick?
Yeah, so we haven't, really heard too much today besides guessing games about the VP pick. Of course, some of the people mentioned as top of the ticket picks could perhaps be who could come as the VP pick. Both Gavin Newsom and Gretchen Whitmer said that they are not interested, or there's reports they're not interested in the top of the ticket. Maybe they'd be the VP pick. Another name that's come out is Josh Shapiro in Pennsylvania, of course, a key swing state. He's a popular governor there. Perhaps that would he was somebody that could bring that state. We've heard Andy Beshear in Kentucky, another very popular Democratic governor who has done well there. We do also wonder if there will be a announcement soon, or that could come just before the convention. They don't have to, given this whole situation, they don't necessarily have to name anybody until then, and they may not. I think a lot of people think, well, we'll hear this soon. We may not hear that. It may be like when Donald Trump named J.D. Vance just at the start of the RNC. That may happen at the start of the DNC as well.
Jody Schneider in Washington for us, our political news director, joining us, of course, to get us up to speed on the latest on the White House, the race for the White House here. Okay, our other top story are these rate cuts coming through, surprise rate cuts out of China. So on top of the 7-day reverse repo rate that the PBOC reduced by 10 basis points in the last hour or so, a reduction as well in the loan prime rates on the 1- and also the 5-year rates. And as you can see, futures are getting slightly an additional boost going into the open today, 15 minutes away.
Yep, coming up, we'll be speaking to Pinpoint Asset Management's Zhang Zhiwei about how, of course, this plays in when it comes to policy. And really, it seems like the PBOC on easing mode now, post third plenum as well. Also talking about this U.S. election risk coming forward here. We're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Monday.
Right, welcome back to shows. A lot of breaking news taking place. So we'll start things off right now with the renminbi fix for today, the midpoint 713, not 35. That's number one. And of course, all the rate cuts that have come through out of China, 1 and 5 year loan prime rates cut, and also the 7-day reverse repo cuts. And of course, the other top story is, of course, what we all woke up to this morning.
Yes, so now that we're talking about Biden dropping out of this race and Kamala Harris is, of course, his pick for who should replace him, it certainly does lead to a lot of questions about this whole Trump trade. Does it put it in doubt in any way? I mean, you take a look at how polling is leading up to this decision. It seemed like Kamala was at least, faring and polling a bit higher than Biden before he made this decision, but still trailing behind Trump as well. So you're already seeing when it comes to Mexican peso, those gains that we saw are evaporating a little bit here, just a few hours into the Asia session. That yield curve still flattening just a bit here. But yeah, gold, Bitcoin still catching quite a bit here this morning. For more, let's bring in Charlie Cook, founder of the Cook Political Report. Charlie, it's great to have you here on the program, of course, on this breaking news. First and foremost, do you think Kamala Harris is a done deal for the Democratic Party?
I do. I think you could say that Democrats did the Biden trade. Yes, the thing is, do I think that Vice President Harris is the strongest Democrat out there? No. And if this were a year ago or 9 months or 3 months ago or even 1 month ago, they would have had a little bit more room to perhaps go another direction. But I think at this point, it's really too late. It would leave a lot of, broken glass. I think it would just be way too messy. So I don't think she's going to face any serious opposition. And then the next question would be what kind of, who does she pick for a running mate? And I think as a minority woman, you'd probably be a pretty good bet to look for a male, a white male, and probably somebody from the Sun Belt. It could be, it could be Roy Cooper, the governor of North Carolina, Mark Kelly, a senator from Arizona. There's Josh Shapiro, who's from Pennsylvania, but all three are swing states. But I think Harris is probably, I think it's going to be a done deal.
Okay, then the next step there would be, how does she fare against Trump?
Keep in mind that President Biden's numbers have been a mess for 2 years, 2.5 years. And Democrats were sort of in denial for a long time about how bad things were for him. And the first debate sort of sealed that and it wasn't so much that Biden dropped a huge distance, but he was already behind. But what it did was it made it much less likely that he could win undecided voters. So I think Harris might be able to pick up a point or two better than Biden did, but more importantly, not having the age, not having the health issue there. I think she's got a much better shot at winning over that, 4, 5, 6% that are undecided. So that I think her, she would have a fighting chance. Democrats, it was about a goner with Biden. I mean, he was no longer electable after that debate.
Do you see any differences between Harris, as a presidential nominee to what Biden's, first term would look like? I'm just wondering in terms of policies that could come out, could it be any different? Or is she sort of the status quo sort of candidate now?
Well, that's interesting, Yvonne, because she is very different from what we would have expected Biden 4 years ago, where he was left of center, but not that far left. But Biden sort of leaned into the more progressive leftward turn in the Democratic Party. So I don't think that there's really that much of an ideological difference between the two. And both would be, I think for a lot of business interests, it'd be pretty aggressive or not terribly favorable to the business community, which was a little bit of a surprise for Biden. But I don't think there'd be that much of a change, to be honest.
Right. One of the main areas of focus from the Republican standpoint, in terms of the line of attack, looking at Joe Biden was, he was unfit for another 4 years. Now that line of attack has gone away, Charlie, what do you think the Republicans will pounce on as it pertains to Kamala Harris?
Well, I think former President Biden will have to be a little bit, I was about to say he was going to have to be more careful, but he's never particularly careful. But he would, I think need to step a little differently in terms of how he goes after an opponent. But to be honest, Donald Trump kind of does what he does, and he represents sort of a persona rather than specific policies. And so I don't think, what Harris goes after is there's a group of people that don't like Joe Biden. They don't like Donald Trump. They thought Joe Biden was way too old. They were really, really, really torn, and they don't like Biden's policies on inflation. But that age health thing was the part that was sort of putting it over the top and making him more unelectable. And this takes the age health thing off. But it's going to be, it's not going to move a lot, but there are only a handful of states. I think that Biden was down to the point where about a 1 in 4, 1 in 5 chance maybe of winning. And now I'd give her, at least at this point, a 40% chance, and it might go higher than that.
Charlie, appreciate your time. Charlie Cook, their founder of the Cook Political Report, joining us out of Maine, of course, Sunday evening. His time to break news, of course, Biden endorsing his vice president for candidacy, of course, for president. We're going into the open today. Futures are pointing up. There's a rate cut story also taking place here in the greater China region. Plenty more ahead. A preview of the Monday session is just ahead. This is the China Show. Welcome back. You're watching the China Show. We're mapping out really where the FX markets think hedging needs to be going into the U.S. election. So you're looking at the spread between 6-month implied vol on dollar China and 3 months. In other words, how much more volatility do markets think will take place between October to January compared to the next 3 months, which doesn't capture, of course, the U.S. elections. And the average is about 0.3. We're about 4 times higher than that. In fact, at the current levels, the premium now is a lot higher than the approach to the 2016 elections. In other words, it matters right now, and hedging is coming in here, of course, Yvonne.
Yep, certainly that is where we are dealing with that volatility in the FX markets here today. Take a look at how the pre-market in Hong Kong is set up here right now. It looks like we're still pointing to some gains at the open. Just a few minutes from now, we're up about 1/3 in the pre-market. A50 futures are also punching higher. I think stocks are liking the fact that we got that surprise rate cut from the PBOC here today. Well, rate cuts, I should say, not just in the 7-day reverse repo, but also those 2 benchmarks for the LPR as well. So we're watching the banks. We're watching, of course, developers here this morning as well. But HS Tech is catching a bit here, 729, a little bit weak on the currency as well. And of course, we're watching, of course, what plays out in the whole Trump trade here and how does it really affect the whole China narrative as well, post third plenum. You're watching the China Show. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the opens of markets. And of course, first we were really focused more on this whole U.S. election risk with Biden dropping out of the presidential race. But certainly just the last few minutes or so, we're tilting it back to our focus to China, right? These surprise cuts in the 7-day reverse repo, Dave. Also, when it comes to those LPRs, just minutes later following with a cut as well. Does this actually move the needle in terms of growth? And of course, some are saying, does it actually change the narrative after that third plenum, which did disappoint many investors out there?
Yeah, the lack of details, although certainly when you go into the Politburo meeting is probably where we might get slightly more meat in the bones. I mean, as it pertains to markets, though, to your point, right, we are actually seeing the Chinese equity complex moving against the grain today. So you have the likes of Japan, South Korea, of course, the chip story. We haven't talked a lot about that, too. That's still continuing. The downdraft we're seeing in the Asia Pacific. TSMC, last we checked, is down 1%. But to the point we were making earlier on, it's probably showing up more in Hong Kong than it is in mainland China as well. Is the national team coming in? Did they come in last week? And certainly we have a chart that shows you they probably did to come in to stabilize these markets as the third plenum was ongoing. Now, when you look at it open in Hong Kong, can we flip the boards, please? Because a couple of things here, right? We're coming up the worst week on MSCI China. Going back to almost the start of the year. So the week of January 19, which was when we had the cascade lower. And then we had, of course, that first sort of move into ETFs to support the equity market. So we're coming off a week like that. Last week. We are getting a bounce, as you can see, so an additional injection of caffeine, if you will, from those rate cuts out of the PBOC. We are getting a big move across some of these big, the large caps here. Tencent, as you can see, is up by about 1%. The other part of the equity market we're tracking today, so you have gold and you have Bitcoin, right? Gold is 2,500. We're up on spot. We're up across the futures curve on gold. Bitcoin is at 68,000, should be coming up bottom of your screens as well. Not really seeing much reaction here across some of the gold mining stocks, although it's worth mentioning that a lot of these stocks have been bought up substantially, overbought in some cases as well. There we go, Bitcoin, 68,000. Some of the crypto-related equity markets here, equity names on your screens. Right, very quickly, as I promised here. So last week we had this massive inflow into these large cap ETFs that tend to track, of course, the benchmark, and certainly these are some of the favorite targets from state funds as they come in when they tend to support the market. Check out the inflows on Friday, right? The most going back to, as we pointed out, at the very start of the year. So really, sentiment is something I would imagine policymakers are also looking to ring fence at this point in time. Yvonne.
Yep, and certainly maybe it helps now that we are hearing a little bit more from the PBOC after this third plenum. And let's recap just what we heard, right? So first of all, is a 7-day reverse repo, 10 basis point cut there. That was already a surprise. And then minutes later, the 1-year and the 5-year LPR basically following those moves here this morning. Let's bring in our China correspondent, Min Lo. 10 basis point cut. What sort of impact does that have on the economy?
Well, it came in a bit earlier than expected. We were expecting the PBOC to be more synchronized with the Fed. But also, I mean, it's a good timing as well because markets have been expecting a cut since the start of this year. We haven't had an MLF rate cut since August of last year. And a big thing that was preventing the PBOC from cutting rate was to keep the yuan steady. And we're seeing the dollar really softening recently after the weak CPI print. So it's a good window to cut. And also, another factor preventing the rate cutting cycle is that plunging CGB yield. And after the PBOC signaled that they could step in to sell bonds, we have seen a rebounding of those yields as well. So it's a good timing for them to cut, especially coming on the back of the third plenum as well. So it's a coordinated signal that the government is willing to lend more support to the economy.
Yeah, and also on loan prime rates, which came in 15 minutes earlier in terms of the release.
Yes, 10 basis point cut. I mean, it's not significant, but it's not nothing as well. And for those people who have borrowed against the loan prime rate, it would help to reduce a bit of that interest rate. It could protect cash flow and maybe convince more people to enter the property market as well. And really combining that with the third plenum and the policies coming out of that, you have seen that tax and fiscal reform, the government reallocating more resources to local governments and also, giving a bigger share of the consumption tax to local governments. That's going to do two things. It will help them have more incentive to boost local consumption. It will also give local governments the ability to spend more to inject stimulus into the economy. And then you have some of those property sector reforms as well, pledges to reform that pre-sale model that has seen developers not completing those millions of homes that have already been paid for, and pledges to give more autonomy to local governments when it comes to regulation of the property sector. So all of these taken together could go some way to help boost growth in the second half of the year, especially after that weak growth number we have seen in the second quarter.
Okay, Min Lo, thank you so much, our China correspondent there with all the latest on, what's really been a relatively busy morning as far as China is concerned here. Let's bring in Zhang, President and Chief Economist at Pinpoint Asset Management, here with us on set to react to all the news this morning. How much do you think these rate cuts will help?
Well, I think on the margin, it helps the economy, right? I think the most important thing is send a signal that the government cares about the economy. They recognize the economy is not doing well, so they want to do something to help the economy. I think that's the important message, because the second quarter GDP, last week surprised quite a bit on the downside, right? So, but 10 basis point, can it really change the economic outlook? I don't think so.
The timing of it is interesting, though, right? That they're willing to at least cut rates before the Fed does. Does that mean that they're less concerned about the currency, the impact on the bond market?
Yeah, it's a trade-off, right? So you have multiple targets. You want to help the economy at the same time. You want to keep the exchange rate stable. At this moment, I think they move a little bit on the margin to help the economy. I think that they really feel the pressure, the downward pressure on the economy. But I think fiscal policy is a lot more important than monetary policy. So let's see. In 1 week or two, I think we'll probably get more, clear message on fiscal policy, what they're going to do there.
Yeah, well, what expectations do you, and I assume you're talking about the Politburo meeting
Right. That's right.
Yeah. What assumptions are you making there? What do we get out of the Politburo?
Well, I think that meeting will focus more on the Q3 monetary fiscal policy coordination. And first half, the fiscal policy is very conservative. So I think they will change the wording on fiscal policy in pretty meaningful way. That's my expectation. I hope they do that. Particularly, actually, we got a little bit message from the third plenum over the weekend that they're saying that, the local government bonds they issued, they want to relax the rules there. They want to allow those local governments to utilize those loans for, flexible purposes instead of just targeted to particular projects. I think that's useful. So something along that line would be helpful.
What do you think was missing from that plenum, though? I mean, yes, they talked about, maybe sharing a little bit of those revenues to local governments from the central government. They talked about maybe some support to the private sector. But how will they implement this, do you think? Yeah,
I think the implementation is really the key, right? So because if you look at the third plenum 5 years ago, 10 years ago, pretty good plans, but some of these measures didn't really implemented effectively, right? So that's the key issue in the next couple of years to see how this, particularly I think the fiscal reform that they mentioned, it sounds like pretty ambitious plan. Consumption tax, they even mentioned the property tax, but I don't know exactly what they have in mind, whether they really want to make it a very big comprehensive fiscal reform, or they are talking about more redistribution. So it's not very clear at this stage yet.
Yeah, and I think it's purposely vague as well, right? Because in some cases you don't want to see how things play out. I need to also ask you about the prospect of more tariffs. Of course, as we head into the elections there. Do you think policymakers need to ring-fence the economy further? Because exports have been really a key area of growth.
Right.
And I'm wondering, do we get an exchange rate also that adjusts higher? How are you looking at that?
It's possible. I think, exchange rate adjustment could be part of a package. If that 60% tariff really happens in the first half of the year, I think the government is probably preparing for it. There's a lot of discussion in the market, sell-side written reports about it. Now, it's not very clear at this stage. And there's a lot of uncertainty about how the U.S. will impose that tariff, right? So whether this is only a threat that they want to bargain with China, to want China to,
to the table again.
Yeah, to make compromise in other areas. So it's not very clear at this stage. I don't think the Chinese government will react with a huge exchange rate depreciation immediately. I think there's probably a process, right? So U.S. impose tariff, China make some concession, meetings, negotiations, that kind of process. Yeah.
Does it only supercharge this whole industrial policy of self-reliance?
Yeah, well, it's already happening. I mean, actually not just in China, globally. And in the third plenum document released over the weekend, there's a lot of talk about that as well.
You mentioned, though, there is a bit of a danger, though, of focusing too much on these industrial policies versus macro policies.
I think so. I think in China nowadays, that's one concern I have actually, reading the third plenum document over the weekend, is that there's so much focus on industrial policies. This particular policy they want to target. We really need more thinking about macro policy, about boosting domestic demand, not about increasing supply, right? So I hope there's more action on fiscal side that help, help the household consumption coupon or raising government deficit, those kind of policy. Those would be very encouraging for the market.
Well, I mean, do you think the stock market is a policy target as well? Do you think improving sentiment in the market has become an economic initiative as well? On the back of it, it's a consumption story, isn't it?
Right. I mean, it certainly has impact on the sort of a wealth effect on the household, right? But I don't think it's that important from a policymaker's perspective. And in the third plenum document,
in other words, do they care about the stock market?
Right. They care about it, but it's they care about a lot of things. So in terms of ranking, I mean, how is it rank on the top of the policy? Certainly, exchange rate matter more.
Right. I want to ask you about the recovery in the housing sector. Some of the things that we've heard recently is that things have started to pick up in the first-tier cities, in Beijing and Shanghai. Do you think, is that a good sign? Do you see that spreading into lower-tier cities, for example? Or is this a two-track recovery in the housing sector for the foreseeable future?
Well, for now, even in Tier 1 cities, I think there are mixed messages. I wouldn't say in Tier 1 city there's a very strong recovery.
Okay.
I mean, there's some transaction pick-up in the second-tier houses, right? But it's also not, I mean, it's not happening in a very broad-based way. In tier 2, tier 3 cities, I think it's still relatively weak. We're looking at the high-frequency data very carefully, waiting for this sign of stabilization. It's not clear at this stage, and I think the government probably need to do more on the fiscal monetary side. It's not just about industrial policy or sector policy. They really need to do a sort of a broad-based policy easing to help.
And what would be enough, you think, to at least find some sort of floor in the property market?
Yeah, I think the fiscal policy, I hope they can announce further raising fiscal deficit or issuing more bonds more quickly. So something meaningful, something strong, a strong signal. Even on the monetary policy side, I think 10 basis point, helps, but it's quite small, right?
Well, it's Monday. Let's end on a positive note. What's going well? What isn't worrying you?
I think the policy, the rate cut, don't take me wrong, I think the rate cut is a positive signal.
Okay.
And it is happening before the Fed rate cut cycle, right? So this is better than the market expected. Right. So I would take it positively. And I think the government probably will follow up with other measures, because this is after third plenum, after the second quarter GDP, and then we have the Politburo meeting very soon. Monetary policy is very easy to move, so that's the first move. I think there will be probably fiscal other policies to follow in the next few weeks.
Zhang, thank you. Zhang Zhiwei there, President and Chief Economist at Pinpoint Asset Management. We got plenty more ahead. This is Bloomberg.
What is clear and what is undisputed is that there were likely going to be a lot more trade wars. We're likely going to see tariffs being used as a geopolitical, new weapon.
The fact is, there is going to be a much tougher relationship, regardless of the administration, with China.
President Biden has been more effective, I think, in terms of hitting China in ways that matter for U.S. security. President Trump is promising 10% tariffs across the board on all nations, a so-called flat 60 on China. So I think it is a vitally important election for U.S.-China relations.
Some of our guests earlier there discussing what the latest developments in U.S. politics could mean for global trade ties, and certainly Southeast Asia is a really big part of that. In fact, we're focusing on that part of the world right now, given what's been taking place and all these developments as it pertains to the elections. Let's bring in Gabriel Hong with us out of Singapore. Gabriel, as we watch these changes literally take place, what do you think leaders in the region will be watching out for in the event, of course, we get a political shake-up there in the U.S.? Shake-up.
Yeah, indeed. I think the political developments out of the U.S., I think, just throws a spanner into works for countries in this part of the world. And as your guests earlier have been pointing out, tariffs are a key part of that equation. But I think, to be clear, we're still, it's early days, a bit too early to tell. As far as the DNC is about a month away, the U.S. election is still about 4 months away. We are already hearing some of these analysts pointing out how a Harris-led ticket would mean this continuation of Biden's policies. As for Trump, it's really about this America First approach. And indeed, some of the analysts that we've been speaking to have pointed out that regardless of whether we see a Republican or a Democrat presidency, it's not going to mean that much of a difference for countries in this part of the world, because they're already dealing with this strategic competition between the U.S. and China and some of these protectionist measures. That being said, we have Trump, as you guys were mentioning a short while ago, talking about these 10% universal tariffs. So for countries with big trade surpluses with the U.S., such as Vietnam and Thailand, the concern is that they could be targeted by Trump. And then, of course, we also have concerns about military strategic tensions for the likes of the Philippines, especially amid growing tensions with China and South China Sea.
Yeah, and we're expected to hear from the Philippine President Marcos addressing the nation today. What's expected?
Yeah, so this is an interesting timing because it also comes at a time where his popularity has taken a dip, and we're seeing this amid a growing rift with the family of his predecessor, Rodrigo Duterte. He is expected to have some of these plans for the economy as well as upholding of the claims in the South China Sea take center stage when he speaks. In many ways, he has kind of shifted the Philippines more towards the U.S. since he's taken office, in a departure from his predecessor. And we are seeing all these growing tensions with Beijing as well, coming to a head. Just last month, we saw how a clash left a Philippine sailor losing his thumb, and really highlighting the need for these tensions to be eased. Indeed, over the weekend, we heard China and the Philippines, they've reached an understanding of some of these disputed sea missions. So that's what we're seeing, geopolitically. But of course, for the domestic audience, it's about the economy. We still have elevated inflation, poverty, joblessness, all these issues that he will have to kind of lay out and give a bit more details on in his speech. David.
Yvonne, yep, in Singapore for us. Thank you so much. Just very briefly, looking at U.S. assets, so in terms of just how the political story is affecting equity markets, not releasing a lot of reaction. I mean, keep in mind, we're also moving into a window for earnings, and of course, at some point, we'll be talking about the Fed. U.S. futures are pushing higher, yields are lower, the dollar is softer, and also you are getting a slight drop in VIX futures Monday morning here in the Asia Pacific. So market reaction, all things equal, not a lot.
Not a whole lot. I think it would take a lot, because given how much markets were pricing in maybe a potential Trump victory, a Republican, red wave or whatever, does it really change the narrative in any way that, Biden is out and Kamala Harris is in?
Maybe not a lot. Not a lot.
Because, the polls suggest that Trump is still in favor and still leading. So, does it really move the needle? Maybe not, but, we will see. A lot can happen in the next 4 months or so, less than 4 months now. And I think we're pretty close to that Democratic National Convention as well. So certainly, yeah, there's a lot more on tap here. We're going to check some other stories across the world. Israeli Prime Minister Benjamin Netanyahu is also set to meet with President Biden in Washington on Tuesday in his first trip outside Israel since its war against Hamas began. Now, he will address a joint session of Congress later this week, and it follows Israeli strikes on targets around Yemen's Red Sea port of Hodeidah over the weekend after a drone attack on Tel Aviv by Houthi militants. Bloomberg has learned that Nippon Steel has hired former U.S. Secretary of State Mike Pompeo to help complete a proposed purchase of U.S. steel. Sources say Pompeo will act as an advisor to the Japanese firm for its $14 billion bid. The deal faces a national security review and opposition from Donald Trump, senior Democrats, and the Steelworkers Union. And Samsung Electronics' largest union says it will stage a rally on Monday at the company's chip production complex south of Seoul. The National Samsung Electronics Union expects around 1,500 employees to take part. The planned event comes days after the company and the union discussed a schedule for wage negotiations. We got plenty more ahead. This is Bloomberg. All right, this is what the pulse check of really of these Trump trades here this morning. And yeah, you're seeing still Mexican peso, we're sliding between gains and losses, but for the most part, we are leaning towards gains now. So a key beneficiary, I guess, of Biden dropping out of this race and a bit of that unwind in that Trump trade. We're watching, of course, gold. I think we're getting ever so close to 2,500, and we're maybe within reach of a new record high possibly here. We'll see. And Bitcoin looks like we're getting closer now to 68,000 too now, Dave.
Yeah, we were slightly above that level earlier on. It really has been in these two, which has been fairly consistent across, the pickup in momentum behind Donald Trump. It's really been gold and Bitcoin. Very briefly, some other things we're tracking here. So, earnings is still a big theme that we're tracking. So a lot of big moves in China. So CITIC Telecom, 22% drop. I think it was almost a 40% drop in net income, the guidance for the first half. Zhou is a similar story. I believe that's at a record low right now on the stock itself, down 11%. That's also after the company guided towards quite a material drop in first half net income. And Xpeng, of course, the positive story there is this tie-up, I believe, with VW earlier on and boosting that specific stock. it's a collaboration pact with VW on EV tech. There we go. 1.7% to the upside. Still a story that is taking place right now is this pullback in chip stocks. So Samsung Electronics, TSMC, as you can see, are dropping substantially again. And this is really the main drag across some of the other benchmarks in the region.
Yeah, you got to wonder what this means, right? Is this really the Trump trade? Or is there a bit more of a, I guess, profit-taking in some of these?
Yeah, I mean, this is an intersection of many themes, right? The crowded trade, the prospect of some of these companies not being able to service their Chinese clients, this broadening out of this tech trade, as they say, right?
Yeah.
So, I mean, it's great for us financial journalists because we can take our pick between 3 or 4 different reasons to put on our headline. But sometimes, you know, there are slim pickings out there. But anyway, as you can see, this is really dragging down the chip complex here in the region.
Yep, this is what your China markets are doing here this morning as well. Of course, you know, we're following, of course, what happens with this U.S. election, but certainly a lot of the focus has been on these PBOC cuts. But now we're seeing most of these benchmarks are lower. In fact, the CSI 300 is down about 0.6%. Keep in mind, we also had a bad week last week. Where we actually we were talking about gains last week.
MSCI China had the worst week
since January.
Yeah.
But you take a look at how offshore markets are doing. It's actually the onshore market that's doing worse. Asia Tech is pretty much flat here right now. But we're watching very closely those CGBs because it looks like the curve is shifting slightly lower here in the back of what we heard from the PBOC taking action this morning. Still had more analysis on the U.S. election shakeup. We're going to hear from Teneo on where investors should be looking. Plus, we have Kishore and Mahbubani from Asia Research Institute joining us. To the China show. Here's a look at the CSI 300 just a half hour into the session, and we are seeing some downside here, about 0.6%. We normally don't see moves like this. It's actually quite pronounced in the onshore market here today, and actually we're seeing more declines when it comes to what we're seeing in Shanghai versus Hong Kong here today. So after that 7-day win streak that we saw actually last week, we're seeing the CSI 300 dropping on this Monday morning. There's a little bit of that Trump uncertainty, U.S. election risk uncertainty. There's also, of course, some surprise rate cuts this morning as well.
All yuan negative. Yeah. If you put all those things together, too. So we are looking at dollar China, of course, trading on the higher side of the recent range, 729, 730, thereabouts there. The midpoint for the session today, not material enough, I guess, in many ways. I mean, we did wake up with, obviously, the massive news out of Washington. Plus, of course, China surprised us with a rate cut earlier on the 7-day reverse repo, which is now the benchmark, by the way, and also reductions in the loan prime rates. Add to this that maybe the moves last week in Chinese markets, where you did have at least some signs of state support, keeping the A-share market stable while things were selling off in the offshore space like Hong Kong, worst week since January, and that actually widened that premium. And we might be seeing a reversal of that today. We haven't mentioned, too, is the continued pressure we're seeing across some of the big chip plays here. So Samsung in Korea, TSMC's in Taiwan, for example. And that's the reason why, mainly, the Asia-Pacific index is down about 1%. We're steady across U.S. assets right now, of course, on the back of some of the news coming out of Washington there as well.
Look at the TAIEX is down 2.5%. I'm guessing TSMC has a lot to do with that, plus some of these big tech plays as well. But let's get to, of course, one of our top stories, the U.S. election shakeup. You also have another top story. The rate cuts out of China are really top of mind for investors today. Let's bring in our MLI strategist, Mark Cranfield. Mark, you know, we'll talk a little bit more about presidential risk in the U.S. Coming up first. But, you know, I want to talk a little bit more about these rate cuts across the board. It seems like the PBOC gave another reason for this bond rally in China to resume again.
Yeah, it's ironic, isn't it? Because they have been telling investors not to get too ahead of themselves and expecting yields to keep on falling. And there have been concerns that the bond market was getting too much of a one-way bet, that traders were already had long positions and they seem to be growing in confidence that that was the right thing to do. And we did see a couple of small pullbacks in the Chinese bond market. But as you say, this morning it's off to the races again. And it probably comes down to a question of priorities for the central bank. They probably analysed what's come out of the third plenum, and they probably correctly have sensed that equity investors are not going to be overwhelmed by what they see. You see a bit of weakness this morning in the Chinese stocks. We may well see the home team come in the afternoon, as they often do, and try and support Chinese equities. But for now, it doesn't look very promising. So the main job of the PBOC is obviously to do what is right, what's best for the Chinese economy. And if they feel that inflation is going to stay low for a very long period of time, if they feel that the headwinds to the Chinese economy are still very strong, then it's their job to try and do what they can to stimulate through monetary policy. So you've seen the rates lower today, and that's what they can do to help. If that means that the bond rally has to go a bit further, then that's something they really can't stop if they want to do the main part of their job, which is to try and make things easier for corporate borrowers and for individuals as well. Now, they may well come in with some verbal intervention from time to time and say they don't like the bond market getting too overheated, but they probably resign themselves to the fact that the bigger picture is that yields still need to come down, and that means that the bond market can probably rally. Probably the main concern within that would be they wouldn't want the yield curve to go inverted as we've seen in the United States. They will probably want to maintain a positive curve. So if there's any sign that long-end yields are coming down too quickly, that's most likely when the central bank will come in and push back against the market. But as long as yields are falling gradually across the curve, they'll probably just have to let it happen as they wait for more developments and more details coming out from the third plenum.
Mark, just to get your thoughts on something else that's maybe getting crowded out because of the headlines, but this pullback in this long semiconductor play, Samsung is down quite a bit. TSMC is dragging down this TIEX market, almost 3% now. Any signs that you think this is abating, or does this continue?
Yeah, in a way, it's a little bit surprising that it still has momentum on the downside today. You may have thought that last week people have a chance over the weekend to reassess. It was a very bad week last week, and of course it was triggered initially after we had some reports the United States was going to impose some sanctions on companies in Japan and Europe as well, which was a bit of a surprise to people. You would have thought over the weekend a reassessment, people may have been a little bit more sanguine today. That's not the case. We're still seeing some pretty big selling. From here, the earnings picture will probably take over. Some of the big names begin in the United States this week. We've got Microsoft, Alphabet coming up, rest of the Magnificent Seven in the next couple of weeks. NVIDIA doesn't come until the end of August. So you certainly have a period where earnings are going to start to take center stage. If the numbers continue to come in as good as they have been in previous cycles, then the market will probably re-establish some confidence. But we have set a very high bar, particularly related to the AI story. Investors will need to see clear evidence that AI is producing the goods, that the numbers coming through from that are what they expect or even better. The outlook needs to be very good as well. So the earnings season now is even more important than it was before. There's going to be a lot of volatility around it. But because there's such a long way until NVIDIA comes, this volatility and uncertainty will go on for a few weeks at least.
Mark, thank you. Mark Cranfield there, our MLI strategist, joining us. I also want to thank Vonnie Quinn. I want to bring her in as well. She's joining us live from Washington here this morning on the news, of course, of President Biden dropping out of this presidential race. Vonnie, obviously, there's a lot of questions about what the Democratic Party is going to do, but we keep hearing this kind of drip news feed of endorsements for Kamala Harris. What's the latest?
It does seem like it's picking up steam once we got that announcement from Biden that indeed he would be addressing the nation later this week and that he was dropping out of the presidential race. Then it took a little while because aides said that he had just told them literally moments before he tweeted out that news. So after a little while, we did start to get some endorsements, and now it's really picked up steam. We have endorsements from several high-powered senators and congresspeople: Elizabeth Warren, the Congressional Black Caucus, Senator Patty Murray, Jim Clyburn, who had originally got her the role and who had helped even President Biden get his presidency 4 years ago. And now we're also getting the delegations. So South Carolina, New York delegates, New Hampshire delegates. That makes it seem like a very unified Democratic Party. They are getting behind Kamala Harris. Not only that, but nobody else has come out so far to challenge her. In fact, some names that would have been in the hat, for example, we were looking at potentially, Gretchen Whitmer of Michigan, for example, or Gavin Newsom of of California, they have come out and said they wholeheartedly endorse her. And we know from somebody familiar with the situation that Gretchen Whitmer is not considering challenging Kamala Harris. So it does appear that this party wants to appear extraordinarily united. This after a series of events that made the Republican Party look extraordinarily united up to the end of the RNC this week.
Yeah, and Vonnie, are you hearing anything around who the VP pick might be?
Some of those names that I already mentioned were in the hat, but it doesn't look like Gavin Newsom would be a pick because he is from the same state, obviously, as Kamala Harris. Similarly, Gretchen Whitmer is a woman, and it seems like she also thinks it's a very complicated time and doesn't want her hat thrown in the ring. But there are others from swing states that could be potential picks. Josh Shapiro, for example, a very young governor. He could bring Pennsylvania with him. There's also the potential for Kentucky. Andy Bashir is a name that's being thrown in there. And we know that some of these people are actually going to be appearing on U.S. morning shows Monday morning. So clearly interested in the position. J.D. Pritzker of Illinois is another one that could be a potential pick. But of course, Kamala Harris can wait because the convention isn't for another 3 to 4 weeks. She doesn't need to have her VP pick out there until right beforehand or even during the convention itself. So we do have some time, and we might see some fireworks between now and then.
Yeah, in terms of donations, I mean, we were watching what was going on in X with Act Blue. They've been talking a little bit more about how much they've been getting in terms of donations. So 46.7 million, I believe, is what the latest tweet had said through that platform since, of course, Biden made this decision. Are we likely to see more of this sort of fundraising boost?
Yes, and not only that, but all of the money that had been raised already is able to be transferred to Kamala Harris now that President Biden has sort of passed the mantle, if you like. So there's no complications there. There will need to be a huge amount of money raised in order to up her profile nationally, even though she obviously is known as the VP. But for her and a VP pick for her, so a new ticket, there will have to be a fortune spent. But yes, again, there was a huge level of fundraising done just in the hours after President Biden. Bear in mind, it's only been something like 7 to 8 hours since President Biden actually made that announcement. So if that's anything of an indication of what's to come, then it is a very good sign for Kamala Harris and whoever she does pick as VP. We do have, of course, plenty of donors that we know had left essentially the party early because they didn't want to see Biden run again. Now they're very possibly back in the fold once more as well.
Vonnie Quinn in Washington for us here. And for our Bloomberg clients, you can turn to your terminals for more on the story. TLI Vigo, it's ongoing as we speak, of course, commentary analysis from our expert editors on this developing story out of Washington this Monday morning, Sunday evening, of course, if you're joining us out of the United States. This is The China Show.
I think she's got a much better shot at winning over that, 4, 5, 6% that are undecided. So that I think her, she would have a fighting chance. Democrats, it was about a goner with Biden. I mean, he was no longer electable after that debate.
She has been second to President Biden, and she's also a woman of color and identifies with black voters. And black voters are essential to winning any presidential campaign for the Democratic Party. So in that, I think she has an edge against almost anybody else that could seek the nomination.
It's more than 3 weeks now since that terrible debate performance that he had, and it felt like increasingly the writing was on the wall that he was going to have to step aside. So again, I think in some ways, while we're still reeling from a series of unexpected headlines over the last few weeks having to do with this presidential race, uncertainty is actually a little bit lower today than it was yesterday.
Some of our guests reacting to President Biden's decision not to seek re-election and instead endorsing his VP Kamala Harris as the Democratic contender. Let's bring in Gabriel Wildau, Managing Director at advisory firm Teneo, joining us out of Philly today. Gabriel, good morning from the Asia Pacific. I mean, if it is Harris, what does it mean for relations with China? If it is Trump, is it simply Trump 1.0 and we look and extrapolate that?
Well, even with this wild card that's been thrown in today with Biden's announcement, I think we know what to expect from a Harris administration or from any other contender who might replace Biden on the ticket in terms of China policy. I think we know very clearly now what the Bidens Biden administration's framework is, and I would expect that to continue in a successor administration. The balance of the uncertainty and what my clients are asking me about the most is still what to expect from Trump, because, David, as you alluded to, there's no clear way we can extrapolate from Trump 1.0 to Trump 2.0. There are lessons to take. There might be some continuity, but it's also possible things get weird and different, particularly because, there was sort of pre-COVID Trump on China and post-COVID Trump on China, and those in themselves were quite different. And then on the campaign trail, he's given quite mixed signals. So my clients are still trying to piece through what to expect there.
Yeah, I think there is that question, right? The campaign Trump and what he may do once he does become president again. So how likely do you think is this sort of major tariff threat of 60% tariffs? I mean, how close? Are there reasons behind it to really, at least suggest that this is quite a big likelihood once he does become president?
I think the 60% number isn't something I would put a lot of stock into, but I do believe we will see new tariffs against China under Trump. It could end up being less than 60%. But if you look at Bob Lighthizer book, if you look at other people in the Trump orbit and what they're saying, I think there's consensus around the need for protection. However, arguably that would just be, more tariffs. Biden has already embraced tariffs, so it's a kind of a difference of degree, where I think we might see a real difference of kind between Trump 2.0 and Biden is on Chinese investment in the U.S., where we heard Trump talking last week that he would welcome Chinese investment, for example, in new EV factories inside the U.S. Now, the Biden administration hasn't technically ruled that out yet, but it's very clear where the ball is moving and rolling on that issue, where they are developing ways to block not only imports of Chinese-made vehicles from China and from Mexico, but also to block investment in EV factories here, where Trump says he could take the opposite approach. So that opens up all kinds of doors, not just in the EV industry, but for kind of potentially some kind of grand bargain where overall relations improve as Trump opens that door with China.
Yeah, are we sleeping on that probability or possibility that, in fact, there are areas where, commercial ties might actually come closer together under potentially Donald Trump again?
Yeah. I mean, one scenario I've floated with my clients, and I mean, this is speculative, of course, but I think it's something we need to take seriously, is the kind of what I've called the grand bargain scenario. Because we know that Trump feels much more passionately on these trade issues than he does about the national security side of what has been the Biden policy towards Trump. He's not committed to, a robust military presence in the quote unquote Indo-Pacific. He's not committed, as we also heard him say last week, to defending Taiwan. He thinks Taiwan should pay for its own defense and so forth. So, you could imagine a scenario where Trump makes major concessions on Taiwan in return for mainland Chinese concessions on trade issues, trade and commercial issues. Now, I wouldn't expect that to be an explicit quid pro quo one for the other. It wouldn't necessarily be presented together as a grand bargain, but you could certainly imagine the outline of that kind of understanding between Trump and President Xi.
Yeah, and how do you think China should be viewing this now? I mean, it's interesting, right? Because you mentioned Trump, when it comes to foreign policy, is a little bit more transactional, but also injects much more volatility and uncertainty. But then again, what we've seen with the Biden administration is that he's willing to kind of reach out to allies to try to counter China as a group in some ways. What would inject more disruption, I guess, for China?
Well, certainly the 60% tariffs or anything like that would be majorly disruptive. So I think, with Trump, you've got high variance. You've got the higher highs and the lower lows in terms of the different scenarios that Chinese leaders would be considering. And you could even have both, right? Trump might come in, as he did in the first term, and kind of go big with tariffs starting out. But with the goal, I mean, it was always unclear, even in the first administration. It's still unclear now, I would say. I mean, when you read Bob Lighthizer's book, he no longer seems interested in, using tariffs as leverage to extract concessions. He just feels that the U.S. needs to pursue a sort of maximalist version of decoupling with China. But Trump's approach in the first administration was transactional. He was trying to extract concessions, and he may still favor that kind of approach. So you could imagine a kind of a Jekyll and Hyde scenario where he goes hard with tariffs, but with the intention to try to extract concessions where those tariffs could then disappear down the road once the deal is struck.
And that brings to mind, Gabriel, the exchange rate and potentially how China might respond if, and that's a big if too, if they do go that route, because the first time around in, I think it was 2018 to 2019 when, the trade wars were everything we were talking about, the exchange rate went from just over 6 to over 7. And if you extrapolate that now, that gets us to above 8 on dollar China. Do you think the Chinese will be looking to use the currency as a bargaining chip here, or as a means to respond?
Well, I don't know that China can make credible threats on currency devaluation because they have they may be tempted to try to inject that into the negotiation, at least implicitly, to use it as a threat, as you suggest. But what we've seen, I think, on the exchange rate over the last couple of years is the market pressure, the fundamental pressure is pushing downward on the renminbi, and we've seen People's Bank of China leaning against the wind to try to not prevent depreciation, but to slow it down, to prevent it from getting out of hand and becoming self-reinforcing. So China is not in a position to make threats, I believe, on currency depreciation, because that could backfire in their place. Once they release once they signal that they're willing to depreciate, they could lose control of the currency and it could depreciate far more than they intend. So I don't expect that to be a big tool in their bargaining toolkit.
Yep, and as you say, I mean, the domestic economy is something that they're focusing a lot on too. Yeah. Is there anything that we can glean from this third plenum? Whether it's the readout, there was an interesting presser as well. But is there a slight upside in the near term, Gabriel? Or do you think China did kind of sort of miss some sort of reform opportunity here?
Well, there's certainly no big bang reforms that were signaled at this plenum, but there are some bones that were thrown to the kind of market reform crowd. There was an attempt, I think, to reassure the private sector that they will still be supported, that they will be treated fairly, that President Xi still sees a large role for them within the overall economy. There were reference. I mean, the decision document starts out with lauding Deng Xiaoping and the importance of his reforms, and that's a signal that President Xi doesn't intend to cast aside the Deng legacy. But overall, it's an affirmation of President Xi's campaign of technology-led development, what he calls the new productive forces, Chinese modernization, another of his ideological slogans. So we can expect more state-led industrial policy, more attempts to achieve technological leadership and to pour resources into that, even when it means accepting some waste and slower economic growth and some loss of efficiency. So it's not what the pro-reform crowd was hoping for, but there are a few bones that were thrown to them.
Gabriel, thank you. Gabriel Wildau, their managing director at Teneo, joining us out of Philadelphia this evening. We got plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Here are some major stories that we're following from around the world. Let's start things off in the South China Sea, where the Philippines here says that it has clinched a provisional arrangement with China on its resupply missions to a military outpost in that part of the world in the South China Sea. Now, Manila says the agreement came during bilateral talks on the waterway. Now, vessels from both countries have clashed recently over the Philippines' resupply missions to the Sierra Madre, which is a World War II-era ship that's grounded on a disputed shoal. Israeli Prime Minister Benjamin Netanyahu is set to meet with President Biden in Washington on Tuesday in his first trip outside Israel since its war against Hamas began. He will address a joint session of Congress later this week. It also follows Israeli strikes on targets around Yemen's Red Sea ports over the weekend. Now, a drone attack, of course, on Tel Aviv by Houthi militants.
All right, we are looking at markets here right now, and yes, stocks are continuing to slip here this morning. We're also watching what goes on when it comes to not just these Trump trades, the dollar that is softening, but also what's going on with these chips as well. We're actually seeing some broad-based declines on some of these big chip makers here across the region here. So TSMC certainly is one. We're down some 3%, but if you tally up what we've been seeing, we basically have seen more than 10%, even close to 12% losses from the peak that was reached about 2 weeks ago. So you're seeing that sucking of that sort of tech trade here once again here this morning. You flip the boards. We're also watching what the developers in China, banks are doing here, of course, after these surprise cuts from the PBOC following what the LPR this morning of 10 basis points. Not much reaction. In fact, you're seeing China Merchants Bank down some 3%, not really seeing that much relief from these rate cuts here. And then we're watching these power equipment stocks in China as well. There's been a bit of an expansion into this upgrade program, so you're seeing some pretty sizable moves in some of these equipment stocks in the mainland this morning. We got plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo, and Japanese markets are heading to that lunch break in a moment. Blue skies, beautiful look outside of the city here this morning, and certainly we're watching these markets where not as blue skies. See what stocks are doing. You're seeing downside about 1% for the Nikkei 225 as well as the topics. The yen is flat, but certainly there's been some talk about these carry trades and what's really been going on of late. And given this kind of political shakeup in the U.S., what does it mean for overall the dollar? Does this actually mean, now, if Trump actually does win office, does it really actually mean dollar goes stronger? That's a big question we've been asking our subscribers here this morning. JGB is not doing a whole lot here this morning, Dave. Yeah, apart from what we're showing you on your screens, and certainly taking a back seat, but still probably the biggest mover in equity markets so far is this continued sell-off we're seeing across some of the chip plays, right? So we talked about this earlier. TSMC's down 3%. So that takes us into really sector-wise how this looks on the equity market board. TAIEX is down 3%, right? That tells you everything you need to know about the big movers across these markets right now. So I think TSMC, as I speak, is now down 13% from its peak I think it's just 2 weeks ago. So it's been quick. It's been fairly large in magnitude as well. 1.1% on price on the MSCI Asia Pacific Index. We're softer on the dollar. Yields are slightly lower. There's the gold and Bitcoin story, of course, and we can talk about that later as far as Trump is concerned. MSCI Asia Pacific IT Index, right? So first row, leftmost side, 2.7%, leading your losses today. You do have some bright spots, though, in some of the consumption plays and, of course, commercial services. That's probably your 10 cents of the world, although I'm not sure. You can verify that yourselves, of course, on the internet. Anyway, as we've reported earlier on, the other big surprise that took place this morning is this rate cut out of China, right? So you have LPRs and then you have the reverse repo. So all three, 7-day reverse repo, 1-year loan prime rate, and 5-year, first time since August 2023. That's on the heels of the PBOC surprise move to also trim that 7-day reverse repo for the first time in almost a year. And it's just perfect timing. Tom Orlick is in town to talk us through this. Bloomberg Economics chief economist here in the studio with us. Tom, it's always good to see you. You guys, your team has a whole report out, right? You mixed the rate cuts plus what we heard from the plenum. No big bang stimulus, though, for markets.
So, Yvonne, when you said it's perfect timing, I thought you were going to say it's perfect timing to coincide with the third plenum. But thank you for elevating my arrival in Hong Kong to such an elevated status. But I think you're right. I mean, the third plenum, did it deliver the kind of game-changing reforms that we saw in 1978 from Deng Xiaoping, or even 2013 when Xi Jinping first came in and delivered that big commitment to pro-market reforms? No. But there were some modest moves in the right direction on financing for local governments, on support for the private sector, on driving technology forwards. And then, hard on the heels of that, we have this 10 basis point cut from the PBOC. Now, we've been calling for a PBOC rate cut for a long time. It's clear the economy needs it. Real estate is in free fall. Consumer prices are near zero in terms of the year-on-year change. The PBOC haven't delivered until now, and it's coming. So what we have is we have the reform commitment from the third plenum. We have the PBOC giving a little bit of additional support earlier than expected to the economy. So something on reform, something on stimulus. It's certainly not a big bang. I think we can say it's a little bang.
A bang nonetheless. A bang is better than no bang, isn't it? What are your thoughts? A lot of the guests we talk to here bring up fiscal stimulus needs to pick up, more of the burden here, and unlocking fiscal capacity. What do you make of this new revenue sharing as part of the reform package that they talked about? That local governments do need the help of central governments, and it looks like they're headed in that direction.
So China's got a serious problem here, David. Can monetary policy provide some additional support? Yes, and so it's good news the PBOC has delivered this 10 basis point rate cut. Can monetary policy do it on its own? No. Debt is too high, and that means that even when you cut rates, you're not going to have that significant stimulus impact. So what does China need? Well, it needs fiscal policy to step up. But here's the second problem. Fiscal policy, very often delivered by local governments. Local governments get their money from land sales, and land sales are getting crushed by the collapse of the real estate sector. So I think one of the significant things we saw coming from this third plenum decision was a commitment, not kind of the concrete details, but a commitment to fix some of those financing problems for local governments. Perhaps allow them to collect more funds through a consumption tax, for example. Now, if you put those pieces together, what you have is PBOC doing a little bit more on the monetary side and a commitment on the fiscal side, which could free up funds for local governments to do a little bit more. And that means we could be having some of that delayed fiscal stimulus coming through as well in the months ahead.
We have to focus on the news as well. And given what we've heard, this political shakeup in the U.S., what does this mean for China, do you think, Tom?
So, huge news from the U.S. over the weekend. President Biden deciding to take a step back, to pull out of the race for the November election. What does that mean? Well, it's really too early to say. Kamala Harris looks like the obvious choice for the Democrat ticket. Others very likely will throw their hats into the ring. I'm not a political analyst. My instinct, though, is that this marginally increases the chances the Democrats are going to hold on to the White House. What does that mean for China? Well, Democrats and Republicans have a common tough on China strategy, but it's only Donald Trump who's talking about 60% tariffs on China. If the Democrat chances of holding on to the White House have gone up a little bit, the chances of those 60% tariffs, they've come down a little bit.
Just very quickly here. See, Donald Trump mentioned he likes lower rates, but he's not pleading with the Fed. He's asking the Fed not to do them while Biden's in office. But you guys are of the view that the Fed cuts before the elections happen.
So inflation has come down quicker than expected over the summer. We've heard Fed Chair Powell talk about good news on inflation. July, we think, is too soon for a first rate cut. September, we think, makes a bunch of sense. The markets are now fully pricing that in. Incidentally, I think that's one of the reasons the PBOC had confidence to go for that 10 basis point move today. Because the markets are fully pricing in that September move, the PBOC thought they could cut without having a big negative impact on the yuan.
Tom, great to have you. Tom Orlik, our chief economist for Bloomberg Economics, joining us here in Hong Kong. Let's talk a little bit more about the FX side of things, and certainly what this whole unwinding, or slight unwinding, you could say, of that Trump trade is meaning for FX and rates. Let's bring in our strategist, David Fitterty, joining us now. David, the initial reaction was a slippage in the dollar. How long-lasting can these moves be?
I don't think overly too long. Certainly said at the moment it is a bit of unwinding of that Trump trade. Talking to my contacts today, a lot of them are literally going, look, we just don't really know how this is going to play out. So no one's aggressively trying to sell the dollar or even just trying to buy the dollar. They're quite happy to stay on the sidelines for the moment until there is clarification over who is going to be running against Donald Trump. And even then, the question is, how well do they poll against Donald Trump, to find a better idea of, who will win this election. So, and with that, amidst that uncertainty, the market goes, let's sit on the sideline for the moment. I think they are very well aware at the end of this week, you have GDP data in the US and core PCE data, which remember is the Fed's preferred measure of inflation. So they're going to really quickly turn their attention to that piece of data. As Tom was just indicating, that the market is really looking for that rate cut in September. And if you look at the whole year, it's looking for about basically nearly 2.5 25 basis points cuts this year. So hopefully the market loves rate cuts. So I hope they're looking for that data to support that case, which obviously would push the dollar a bit lower. Having said that, if that data comes in higher than expected, the market sort of will be coerced to dial back its rate cut expectations, which of course would see US yields push slightly higher in the near term and obviously take the dollar with it. So a bit of political uncertainty at the moment, but the focus will very quickly turn to the economic data at the end of the week.
Yeah, and David, the paradox here is as markets look for rate cuts to sell the dollar, other central banks are looking to the Fed for signals when they can start cutting. So the rate differential story remains the same largely. Do you think, though, we're sleeping on a stronger dollar moving forward, I guess is my question?
I think that there's still definitely a chance. I mean, the markets, at the end of the day, even if the Fed cuts rates, it's still this carry trade is still going to exist. I mean, if you cut the rates by a quarter point, let's go say for dollar yen and the carry trade, the carry is still going to be there. It won't be as big, but it's still going to be there. So you're hardly going to want to really sell dollar yen unless, of course, the markets really start pricing in rate cuts far more aggressively, or suddenly, say, the BOJ really surprises and goes, OK, we're getting a lot more hawkish than the market anticipates. So unless other central banks really step up the hawkish game, or really the dollar, there's not really a case to really sell the dollar strongly. Now, again, I don't think that necessarily means the dollar rallies hard. For it to really rally hard, shall we say, I do think then the Trump trade needs to re-emerge, or even more arguably is that these rate cut expectations, if the data proves that they've got ahead of themselves, and they said, remember, the Fed said last time its dot plot, hey, we're signaling 1 cut. I thought 2 was more in line, but even if they go to 2 cuts, the market's going, look, we think it's 2.5. So if you take that half a cut back out of the market pricing, you'll see yields push higher, dollar push higher with it. So the Fed and the dollar really is the key determinants of where other currency pairs are going in the near term.
David Finnerty, our FX and rates strategist in Singapore for us. Plenty more ahead here on shows. You're watching The China Show. Welcome back. You're watching The China Show. We're continuing, of course, to track this developing story, the breaking news, this big shakeup out of Washington, where Biden dropping out of the presidential race. He's nominating, of course, endorsing his VP as a Democratic pick. As one would expect, of course, we're getting a flurry of international reaction coming through as well. Let's start things off by looking through the pages right now of so far what we've heard. We'll start things off with, I think, Keir Starmer. If we have that up, please, can we get that up, please, for our viewers to see? Effectively talking about how, Joe Biden has done a good job and that they are looking forward, of course, to working. There we go. I'm not going to read this word for word, but I know that he has done throughout his remarkable career. He will have made his decision based on what he believes is best for the American people. Right, flip the page, please, if we can. We either have Justin Trudeau or Anthony Albanese coming through as well, and we're hearing this from Justin. You know what? Interestingly enough, the announcement and the fact that this came on X, the announcement from the U.S. president, not so much in the form of a press conference, but a statement on X, really tells you a lot about where the conversations are happening. Anyway, that's a side point to what you're looking at here on your screens from Justin Trudeau.
You have the Canadian Prime Minister there, giving his thank yous and the like to, of course, President Biden and the First Lady. Also, Albanese from Australia is also saying thank you for your leadership and ongoing service, President Biden, as well. The Australia-U.S. alliance has never been stronger with our shared commitment to democratic values. Let's bring in Kishore Mahbubani, Distinguished Fellow at the University or National University of Singapore's Asia Research Institute. He's also a former Singapore ambassador to the United Nations. Kishore, it's always great to have you on the program. It seems like it's a new election cycle now, as we kind of count down to 4 months away. It's a new news cycle in some ways. How should the world be viewing this political shakeup in the U.S.?
Well, the world thinks that when the U.S. selects a new president, it actually affects the rest of the world more than it affects the American people. Because within the United States of America, you have still so many checks and balances. There's a limit to what the American president can do within the United States. But there are virtually, effectively, no checks and balances when a new U.S. president is elected. And the rest of the world actually suffers the consequences of a new U.S. president more than the American people do. And sometimes we believe that maybe we should have a vote also in the selection of the U.S. president.
Now, Kishore, is it too early to talk about implications to foreign policy, for example? Do we know a lot about Kamala Harris, about how a potential Harris presidency might look like from a foreign policy perspective?
I think we do. There's no question that Kamala Harris will be far more predictable in her foreign policy than Donald Trump would be. I mean, Donald Trump, as you know, is almost by nature unpredictable. He can swing from hating North Korea to loving Kim Jong-un of North Korea. We will not see those kinds of swings with Kamala Harris. And by the way, for those of us in Southeast Asia, it helps a lot that Kamala Harris has visited Southeast Asia at least 3 times. She participated in the last East Asia meeting that was held in Jakarta in 2023. And so she knows Southeast Asia. And in that sense, she'll be welcomed in Southeast Asia. Of course, the question still remains who's likely to win in this presidential election.
I mean, do you think that maybe this is more of a domestic question in the U.S., but does she have the sort of momentum really now to beat Trump? I mean, what does she need to do to really narrow that gap?
Well, I have lots of good friends in the United States, and I would call them insiders within the American political spectrum. And they were telling me in recent weeks that the momentum was clearly building up behind Donald Trump, and clearly Joe Biden was losing ground. And I think that's why you saw the moves. Basically, this move was not, as you know, not a voluntary move by Joe Biden. He would have very much wanted to stay in the race, but when the Democratic bigwigs like Nancy Pelosi and Barack Obama keep dropping hints that it's time for him to step down, I think he had no choice but to leave. But the challenge for Kamala Harris is that with the momentum being behind Donald Trump, she's got to now inject herself into the race and show the American people why they should trust her as a more capable pair of hands than Donald Trump. And she will have many challenges because in some ways it's an asset to be the first African-American women to be running in this race. But it also it's an uphill task for her to win over the votes of the base of white Americans. So it'll be a challenge. I mean, no one wants to talk about it publicly, but in private, they will all mention that this is going to be a big challenge for her.
Yeah, Yvonne and I were talking earlier, Kishore, that, fine, we have this earthquake on the Democratic side, but when you look at the current numbers, I have to emphasize that, it does seem Donald Trump is still in front. And I'm wondering if he does go on to win a second term, Donald Trump, how are you looking at some of the hot spots around the world, the Ukraine war, what's happening in Gaza, and closer to where we are, of course, in the South China Sea? How do you think what does a Trump presidency mean for those 3 areas?
Yeah. By the way, it's not a secret that the people who are the most terrified of Trump winning the election are the Europeans. Because the Europeans know very well that Donald Trump doesn't believe that fighting the Ukraine war is in the larger national interests of the United States of America. And in fact, Donald Trump believes, for a start, that his mission, as you know, is very clearly stated: MAGA, make America great again. And in some sense, Donald Trump is right. Why are you spending billions of dollars in Ukraine when the infrastructure of your country is struggling and crumbling in many areas. Why doesn't America prioritize what is good for America? And that's why he's a good. That's why he's appealing to the American voters. So clearly, in the case of Ukraine, I think the Ukrainians and the Europeans are terrified. Fortunately, in the case of East Asia, I predict that Donald Trump will be a bit more predictable because on the one hand, while there's no question that the US-China contest will accelerate over the next 10 years because it's driven by structural forces, not by personalities, as I explained in my book, Has China Won? But at the same time, Donald Trump is a deal maker. And he, as you know, knows and respects President Xi Jinping of China. And when the two men sit together, it is conceivable that the two of them will arrive at a compromise that is good for the United States and good for China too. So there are ways and means of negotiating. So there'll be, costs and benefits of each one. But certainly the region is getting ready psychologically for a Donald Trump victory.
Yeah, you mentioned he's a deal maker, and he's mentioned these tariffs are good for a negotiation in that interview with Bloomberg Businessweek. So the fact that he's more prone to a deal, is there anything that China can offer then in some ways to actually avert 60% tariffs, for example?
Well, I think what it would be good for the Chinese to do is to cite eminent American economists. I'll give you an example. Just last night, I was reading an article by Ken Rogoff. I think you all must know who Ken Rogoff is, an eminent Harvard economist who was serving in the IMF as chief economist too. And he's just recently written a piece in Project Syndicate pointing out that actually, if the United States goes through with the tariffs that Trump is proposing, the negative impact will be felt more by the Americans. The American people will suffer more as a result of these tariffs. And by the way, this is incidentally ABC of economics. Tariffs actually never hurt the Chinese. They hurt the American consumers. And indeed, if these tariffs trigger some kind of a recession in the United States, that's not going to be great for Donald Trump too. So this is not something I would advise the Chinese to say publicly, but I would certainly say they should go privately to him with all the econometric studies that have been done about the impact of these tariffs, and to show that actually he will become very unpopular if these tariffs damage the American economy, makes Americans lose jobs. That's what we have to do. Talk to him privately and give him the data and evidence to show that this is not in America's national interests.
Kishore, Mahbubani, thank you so much, sir, for your time. We could be here. Of course, let's continue this next time, of course. Distinguished fellow at the Asia Research Institute at the National University in Singapore for us as well. If you're just joining us right now for our Bloomberg client, of course, the breaking news out of Washington, you can turn to your Bloomberg terminal for more on the story, just to get you up to speed on the headlines and the commentary that's come through. TLIV Go, take you to this page, scroll all the way down. It's been an extremely busy last couple of hours here as well. Get us up to speed here. Check us out, TLIV Go. This is Bloomberg. Right, welcome back. A lot of moves across these markets on Monday. We'll start things off with what hasn't changed from last week, and that is this chip sell-off we're seeing, and it's playing out. So do expect more pressure to come through as you make your way, of course, into the European and U.S. session. Yeah, we're watching these Trump trades, of course. A slight unwinding. What does it mean for the dollar? Yeah, we see a softer dollar here this morning. 10-year JGB or 10-year yields are down about 1 basis point, but gold, Bitcoin still doing well. You have some strategists out there saying, focus on the havens more so the Trump trade, just given this election uncertainty. There we go. Biden exiting the U.S. presidential race. U.S. futures are pointing higher.